share screen. I will share my screen once again. I will share entire screen. That's the easiest way. But how can I open this? Okay, I think I will use latex. Okay, because it's easier for me to navigate through these things. Yeah, so um, all right. I hope you can see my screen now. Just that this is latex. Okay, it should be fine. So apologies for just a little interruption. Yeah. So today we are going to look at introduction to risk assessment in insurance, and that is according to the plan. So the plan is to look at the overview of risk management in insurance company, importance of risk assessment for insurance operation, regulatory framework and standard for risk assessment in insurance. We look at also role of actuaries. We try to see the challenges and the emerging trend in insurance risk assessment. So that is the plan for today. So yeah, like I mentioned earlier, I'm talking about or giving us a recap of what we have done previous class. Uh, we have looked at introduction to uh, risk assessment and then try to differentiate between two types of risk assessment. Uh, we look at quantitative and qualitative risk assessment. So yeah, and then I remember we look at some basic examples. We see some real life problem. We try to analyze some models of someone trying to insure his car or buying a car insurance for his car. Yeah, and yeah, that is it. So today we are going to look at how we do risk assessment in insurance company. So insurance risk management is the assessment and quantification of the likelihood of an event happening and financial impact. So the thing is here, just like giving definition, the definitions stand the same, just that here we are talking about insurance company to be in specific. So we are specifically focusing on insurance company. So insurance company, just like other companies, so all financial institution, even not financial institution, ordinary companies also perform risk assessment. Yeah. So in insurance, we do risk assessment mostly to check different types of things that can affect the health condition of insurance operation. So risk management work typically involve the application of mathematical and statistical modeling. So I mean here, this is how it is done, because mostly in insurance, let me say 70% of the risk assessment work is done by quantitative risk assessment is kind of quantitative, so it requires a lot of mathematical and statistical modeling to determine the appropriate premium. So if you are that is pricing. So and then and the value of insurance. So in general, we try to investigate premium in such a way that we know the price of all the product that the insurance company offer. So so that they will make sure that the benefit they are giving out is in line or align with the premium they are receiving. So this is kind of risk management, and also checking the value of the insurance itself. So having an idea of how much money they should have and where they should invest. Yeah. So that is it basically. So we look at different types of risks. So first we have financial and reporting risks. So this is the major one, financial risks. That is the major one. So which comprise, for example, we have market, tax, credit, compliance, and government risks. So this is also one of the things that emphasize more on market discipline. I think which we are lacking. I don't know if some research were done to find out whether we have market discipline in insurance. or let me say in financial institution in general, particularly in African countries. So compliance and government and governance. So this is very, very important. So it all depends on the government and the kind of rules and principle in the country. So like you see, we have like ethical, regulatory, international commands, and data privacy. So each country, this is kind of country specific, although we have international standard in many cases. But yeah, there are some things that are country specific, and it depends on how serious the country is. So that is why you see in some countries people will be afraid of buying insurance policy because of risk of default. They can buy insurance policy, and in the end, maybe the event happened and they didn't get the benefit. Yeah, or their data will be exposed somewhere, some of things that are very confidential. So all these are kind of risks that insurance companies need to take into account. And of course, if the government is working and the compliance, regulatory compliance are doing their duty, they have to charge, or they have to find this particular insurance company that leaks their customers' data or any other information. Okay. So the next one is operational risks. This operation, this is kind of within the business activities, day-to-day activities. So we have also, this includes security, technology security, cyber security. There are so many threats that are connected to cyber threat. So in insurance companies, they have to take this kind of risks into account. Supply chain, labor issues, natural disasters, and stuff like that. All these are kind of operational risks. Then we have strategic risks, change in customer demand. So in the market, for example, you are selling some insurance product. Maybe you are selling cars, and you see maybe people doesn't buy cars, doesn't use cars anymore. So you see that when you are going to prepare your pricing, you need to put all these things into consideration. Yeah, or there is change in, let's say, prices of drugs and stuff while you are issuing health insurance product. Then you need to put a strategy in place to make sure that you have all these things in place. New competitors, maybe some insurance company open were open, and then they give maybe cheaper rate compared to your own. So you need to put all this into consideration in order not to lose customers. So we have underwriting risks, the risks associated with the selection of policyholders and the pricing of the insurance product. We have reserving risks, the potential for inaccuracy in estimating future claim liabilities. So, you know, claims are liabilities, whether they are claims that you paid out or that they are yet to be paid out. So, in some cases, you estimate future that the claims amount for maybe for a particular disease will be 10,000, and then there is increase in prices, and then the claim amount changed to 15,000. So in this case, you have to what? You have to lose some money. So if you didn't put this reserving into consideration, you don't have some fund that are reserved somewhere, then you can a company may start getting down to ruin. So we have market risk, exposure to fluctuation in interest rate, currency exchange, and other financial market variables. So, insurance companies, they don't just pay out premiums. One will think about, okay, so we are just giving out premium. We don't even deal with money like exchange rate and stuff. But insurance company invest. Yeah. So by the time they invest their money, they should know where to invest, the kind of stock to buy. So all this is kind of operation that are very, very wide. But yeah, these are the kind of risks that insurance company take into account. So we have credit risks, the risk of default by policyholder. So that is one of the issues. Maybe someone buy an annuity or life insurance contract for 1 year, which is, let's say, payment. He's paying. He's doing a series of payment. Let's say after three months, he's making payment. Yeah, and then at some point he default, he cannot pay anymore. So as a policyholder, you need to pay your premiums. By the time you cannot pay, then this may affect the insurance operation. So it depends. It's a very wide issue. So many things can happen as a result of risks of default. So reinsurance. or other counterparties. So reinsurers, when insurance companies insure themselves, because in many cases they also insure themselves. So maybe the reinsurer, there is a proportion that maybe is a claim happen, the reinsurer will pay 50% and me, I will pay 50%. But the reinsurer is just sitting somewhere. The insurance company is doing operation, paying salary, taking care of staffs and stuff like that. So you see, there is no, like, let me say the proportion should not be 50-50, but in many cases it used to be 50-50. That is how they even define the reinsurer in some cases. So in this case, the insurance company need to put this into consideration for what kind of risks they need to reinsure. Yeah. So how to assess and analyze risks in insurance? So, like we mentioned earlier, we have like two major way of analyzing risks. First is quantitative, and the second is qualitative, which we already defined in our previous classes. So this one will require mathematical model, run some computer simulation and related model. So here, qualitative, just considering non-quantifiable factors and expert judgment evaluate risks. So we seek for consultation. We use our previous experience, what happened in the past, and then make some judgment based on those information. So this is kind of qualitative. It doesn't require any mathematical model. Then scenario analysis, assessing the impact of different hypothetical scenarios on the company financial stability. Yeah, so all these are clear and they are kind of basic. Then we talk about mitigation, risk mitigation. How do we mitigate risks in case it happens? Because no matter strategy you put in place, you have to be prepared for risks when it happens. So it's kind of also, let me say, risk management. Reinsurance. So I talk about reinsurance. Reinsurance is just a situation whereby insurance company insure themselves. Like this is kind of distribution of risks. They don't put the risks on themselves 100%. For example, they insure a very big property, let's say in a very big city, and it happened that maybe there is a fire outbreak, and all the company or that company they insure burned down. So you see, in order to cover these losses, the benefit will be a very big amount of money. So maybe if the insurance company pay this money, they can start thinking about going into ruin. When I say ruin, talking about maybe go bankrupt, not operating anymore. So they insure themselves. Another company or another organization will insure them. Okay, if such event happen, uh, uh, will take 50% of the loss and will pay. Then we have to pay, then the insurance company need to pay them the premiums for doing that. So that is reinsurance. We will look at this reinsurance in detail because it's a topic on its own, and we'll see how the reinsurance and the insurance company relate mathematically and even in general. So diversification. This is like, let me say, a standard rule that if you want to manage risks, you need to diversify, like particularly for insurance company, diversify different kind of product you offer to people. So to split across different classes, that will help you to manage risks. It's kind of risk mitigation. You don't only give health insurance. So if people are not falling sick anymore, or maybe as a private company, government is giving also a public health insurance that they don't have to come and buy private. And yeah, so in this case, you have to maybe think about start giving out property insurance like car insurance and stuff like that. So diversification, then hedging. Hedging is like I mentioned earlier. Insurance company, they invest, so they invest their money somewhere. So hedging is a risk management strategy in which you prepare for the future event that may happen. So if you are using financial instrument, for example, you are investing, you should know the kind of stock you want to buy, the kind of financial instrument. A lot of financial instrument, you are going into derivatives, let's say option. You are buying options, you are buying forward contract, you are going into swaps and things like that. All right. So that is that one. Then regulatory compliance, like I mentioned. So taking into account adhering to regulatory capital requirement to ensure financial stability. Like each country define their capital requirement, but this is standard. Solvency requirement. Some countries define it by certain amount, some by percentage. You have to have a certain percentage before you can operate, or before we can say this company is insolvent, like have the financial capability to operate. Reporting standard, complying with accounting and financial reporting standard. So these are kind of things that, yeah, when we comply is kind of a way to mitigate risk. Technology and data management, using advanced analytical to gain insight into risk pattern and improve decision making. So yeah, protecting sensitive data and system from cyber threat. So this today in technology, this is kind of happening on day-to-day basis. Issue of cyber, so they can chances of maybe exposing customer data and stuff. And if they file your case as a company, you will be fined a lot of money. So there are so many scenarios we can look at, or you on your own you can look at those scenarios that happen. How much in the past some companies were fined due to data privacy or any regulation and compliance related issue. So crisis management. This is talking about contingency plan. So it's important. It's kind of reserving also, like safety loading, preparing for unforeseen event through crisis management plan. So stress testing, evaluating the company resilience under advanced condition, communication and transparency. This is all this before any insurance company start operating. They have to know this. They have to check with the regulation of the country. They have what information they supposed to communicate. You cannot just, for example, you buy as a pension. You are maybe mm, you enter into pension scheme, which is more let me say annuity, life annuity, and you are giving some money to insurance company. So, and they have to invest this money for you. So they have to communicate where they invest the money, what is the return in the investment all the time. They have to be very communicative and transparent. Otherwise, if they hide something and they were found not very transparent, they could be fined. So yeah, monitoring and evaluation, that is done. Some company do quarterly, some do annually, depending on how large or on depending on their business operation. So at the end of every maybe quarter or every year, they try to evaluate what they have regularly, reviewing risk management strategy, adjusting them. They can change their pricing, they can increase, they can reduce, they can do a lot of things. This is kind of evaluation in general. All right. So do you have any questions so far? Okay. So if not, we can continue. So now we are going to look at the role of actuaries in risk assessment. So what actuaries does, and even who are actuaries in general. Actuaries are people like with mathematical and statistical background who have knowledge of and understanding of probability distribution and all other mathematical mathematical knowledge. So they work mostly in financial institution, in banking sector, in insurance companies, and yeah, and their job is majorly analyzing financial data using mathematical and statistical models. So it could be tools, because today there are many tools that were developed already just to operate them. But then, mind you, even though those tools are being validated, they are models, but they have to be validated. Who does the work is actuarial science. So they play a crucial role. And in the society, this is very challenging part. Let's say insurance, especially health insurance. So um, actuaries contribute a lot to see that they address societal challenges, especially arising from pricing, risk management, banking operation, and stuff like that. So yeah, so here I need to update. Okay. Risk modeling. This is mostly what they do. Probability and statistics actually use statistical method to analyze historical data, predict future events, helping to quantify likelihood and severity of different risks. So stochastic modeling, this is a kind of modeling, a mathematical modeling that require a lot of data and then considering different variables. Yeah, so for example, simulate various scenario and assess the impact of uncertain event on the financial condition of the company. We have also underwriting and pricing. So they assist in this case, actually assist in evaluating and selecting risks when underwriting insurance policy, ensuring that the premium charge align with the expected losses. Pricing the model. So they develop pricing model. So there are different kind of pricing model which we are going to look at some of them, um, such as claim frequency and claim severity. Mostly this is the standard classical uh, pricing that we use. Someone have some question or not? No? Okay. I thought someone raised their hands. All right. So then we have reserving. Loss reserve actually estimate and set aside reserve to cover future insurance claim, considering the potential variability and uncertainty in claim payment. Yeah, this one is incur but not reported reserve. Actuaries account for claims that have occurred but have not yet been reported. So they put those helping to ensure adequate financial preparedness. So they do everything, in fact, when it's come to risk management. Enterprise risk management. So risk aggregation actually contribute to the comprehensive assessment of risks across entire organization, integrating risks from different areas like underwriting, investment. So we just mentioned operations. Capital adequacy. This is talking about solvency. So actually help to determine the amount of capital needed to cover various risks, ensuring the company meets regulatory requirement and can absorb unexpected loss. So investment, they also advise and also talk help in where to invest. Asset liability management, that is, they consider interaction between insurance liabilities and investment assets to manage investment risks. Then we have portfolio analysis, actually assist with the risk return profile for investment portfolio. So they look at portfolio in general, considering all the factors, interest rate, market volatility, and everything, and make sure that this portfolio is standard and will bring a good return in the investment. Yeah, solvency we already mentioned. All right. So now we are going to look at challenges in insurance risk assessment. What are the things that hinder risk assessment in today's insurance market? Like in general, I mean, not only today, but even in the past. So, data quality and availability. This is one of the issue that most insurance companies are facing, whether they are private insurance, public insurance, any all the insurance company are faced with data quality and availability. I recall when we are trying to price insurance for Sokoto State Contributory Health Scheme. We have so many challenges with the data. We have to do a lot of interpolation. The data are not real. We have to project so many entries before we get to look at some. They reported like 9 million people having having malaria, in which we find out that the whole population of Sokoto State is around 3 point something million. So yeah, this is kind of, although we understand, it's by number of people showing up, but they didn't, what they report is like individually. Not like me, today I have malaria, I show up, they count me, and tomorrow I show up, they count me again. No, no, no. Yeah, so issues with data. All right. So complexity of risks. The increasing complexity of risks poses challenges in modeling and understanding potential impact. So some risks, if we are modeling them, they are very complex. That is why today, with the help of computer simulation and stochastic modeling, we can incorporate so many factors, so many variables. Ah, God, I have so many things to do. Okay, so regulatory compliance. Yeah, this is we already mentioned. Cyber threat we already mentioned. Changing in climate pattern. So this is related to weather related issues. So what will happen? Um, okay, technology disruption. This is also talking about technology. So then we look at advanced analytics and AI. So today I know very well many insurance companies have started using AI to do so many things. So especially in the risk modeling, you can use AI. But in general, AI is an emerging. Let me say, it's an emerging development. So yeah, not all. It's just growing. In some countries, we don't even have the infrastructure to use AI in so many cases. So blockchain technology, adoption of blockchain for secure and transparent transaction. So digitally, everything digitally, people can have access to see what is happening, what is going on behind their stuffs. Yeah. So here we have InsurTech integration, such collaboration with InsurTech firms for innovative solution and improve operational efficiencies. Big data and telematics. So big data analytics play a very important role today, but this is in emerging. Climate risk modeling. This very part, many universities are focusing their research. It's in climate risk modeling. Okay, evolving regulatory landscape. So parametric insurance. So growing interest in parametric insurance with predefined triggers. So pandemic risk preparedness. So increased focus on assessing and mitigating pandemic risks. All right. So do we have any questions so far? Can you hear me? Mm, Fisayo, I think we cannot hear you well.
Okay, yes, I wanted to ask a question. Sorry, my phone
It's
was
going
on
to put
speaker.
this one.
Okay, so thank you so much. So you said mention something that you still let me take us through insurance as a cost on its own. Did you mention
Sorry?
something that you will still take us through insurance as a cost on its own, like a topic, or we already doing it already?
Yeah. No, 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 no. Reinsurance. I said reinsurance. It's
Okay,
a topic on its
reinsurance.
own.
Okay, reinsurance.
Yes.
Oh,
Yeah, there will be cost on insurance, different kind of insurance, life and but not this semester, it's next semester.
okay. Okay.
Yeah.
So from this last one you just mentioned now, I think we
Mm-hmm.
are only going to use one modeling, Abi. Like this last one, AI, AI on. Since we are using Python, that means it's only this. Is it one we are just going to apply?
You mean for the Python, if we are using Python, or what are you saying? Sorry.
No. Can you scroll down? This big data and telematics. There's something up that has AI. I'm not seeing it well.
Advanced AI analytics.
Yes, advanced analytics and AI. I said, is it the one we are going to adopt for this insurance
Yeah,
risk
when we start,
assessment?
yes, when we start, no, 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 I think no. When we start doing risk assessment with Python, it's not like, yeah, it's advanced analytics, but not AI. We are not going to use artificial intelligence here. Yeah, I don't
Okay.
think maybe we will now, maybe in the future, if I find something how artificial intelligence can be applied, then I can try to bring it up. But For now, we are going to just use analytics. It could be advanced, it could be just basic analytics.
Okay, I just wanted to be sure that out of these emerging trends that you listed, like
Mm-hmm.
I'm thinking, I'm also asking that, is it this first bullet point we are going to use for the risk assessment, or is it everything we are going to apply? That was just my question, because I know that Python is more of coding, like coding and programming. So that was why I was asking if the
Yeah.
first bullet point was the one we are going to use for the trends in this insurance risk assessment.
Yeah, I mean, this
Okay.
trend, I'm talking in general about insurance market, what is happening in
Okay.
the market. You know, I'm not like specifically saying these are the kind of analysis we are doing. This is
Okay.
when we talk about trend, is what is happening. This is emerging trend. In Nigeria, I know maybe none of this, let's say, maybe climate risk modeling, I don't know, and then regulatory landscape. But like I don't know if the insurance companies start using AI and advanced data analytics. So
Okay.
yeah, that is what I'm just trying to highlight. So what we'll be
Okay.
doing is data analytics specifically. Maybe we can apply artificial intelligence there.
Okay. Okay.
Yeah, and thank you for asking questions. Do we have any question? So can I wanted us to have some group assignment for the next class, and the assignment, I will put the assignment in the slide, but just for you to know is please go and highlight the insurance regulatory framework in Nigeria, the kind of regulatory framework behind insurance company, and I'll write it in detail because I didn't even finish finalizing the slide. So as you can see, I'm writing it in LaTeX, and it's dated for today. So yeah, and just I'll put these questions, and when I share the slide, please take a look. I'm trying to bring something. Let's just have a group chat and then discuss the kind of, let's see the kind of regulations, and if at all the insurance company are abiding this regulation, if they are like there is discipline in the market. Okay, so do we have any question once again? Okay, please go ahead, Bello. Uh, just need to check. Yeah.
Okay, thank you very much. I'm not shying away from this assignment. Um, it might not be that easy because I'm not in the insurance industry. I'm in the banking industry.
Okay.
So but it's an assignment, so it's really immaterial whether it applies to where I operate or not. But I know it's going to be relatively easier for those that are in that industry.
In system,
Yeah.
like they have similar regulation, let me say, especially when it comes to solvency requirement. So if you work in the bank, I think you shouldn't find it challenging to relate with insurance companies.
Well, we have different regulator for the
Yeah.
for the banking. I have CBN, then I have
Mhm.
NDIC,
Yeah.
and so the circulars, the guidelines that comes to me from CBN, it
Yeah.
does not
Yeah. Yeah.
relate concern.
Yeah.
And for the insurance, I think it's in NICOM or so.
Yeah.
Uh,
National Insurance Authority, I think.
exactly. So
Yeah.
when
For
they issue
Nigeria.
their own circulars, it doesn't concern me because they are not my regular. But it's okay.
Yeah, but even
It's
that
for
is
knowledge
very
sake, it's still
because
okay
it's
to learn.
interesting, looking at the circular, especially in the banking, especially when we
Yeah.
talk about investment, looking at Basel requirement and stuff like that. Okay, thank you very
No.
much. Yeah, so we can just do our findings and yeah, come up with something. Uh, Pisayo, you have some question, yeah, or you want to say something?
Yes. So, so me also, I'm not working in the banking sector, but I just feel like we can always, I don't know, there must be a way around it. But I don't have any maybe background on in banking, or though I've done actuarial, but I mean this one is more like an in-depth.
Mm.
So I don't have a background on banking. That's what I wanted to say.
Yeah, I can understand, but what I ask is just something you need to research
Or
and
can
find
you
out.
do an example for us?
So, for example, how much money should insurance company will have in Nigeria before it start operation? So, for example, in banks, we know Mr. Bello that work in the bank. How much money is insured by the Deposit Insurance Commission? If you have how much of your money in the saving account or that you have deposited is insured?
Okay, what happened is if there is okay, when the NDIC, when they come,
Yeah.
um, as far as they are concerned,
Mm-hmm.
they are insuring the entire deposit because there is a new approach that is called differential um, uh, deposit insurance assessment, that is something
Yeah.
DPAS.
Yeah.
Now, um, for each bank, annually there is what we call risk-based supervision review of
Yes.
every bank that a joint team of CBN and NDIC they do I mean annually. So
Yeah.
on that basis, there is what we call composite risk rating. The composite
Okay.
risk rating will give the score of the risk that is embedded in that bank. And so the
Yeah.
higher
In
the
general,
composite risk rating,
all the
the
risks.
higher the premium that that
Yeah.
bank pay relative to another bank that have a lower composite
Ah.
risk
Okay.
rating.
Okay. Now I can understand.
So that is it. And even when they charge the premium and the bank
Mm-hmm.
pays, when there is the eventuality,
Yeah.
experience has shown that
Mm-hmm.
there's always a peg. Maybe I think maybe
Yeah.
500,000 or thereabout.
Yeah.
So
Yeah. That's what I had. Nigeria 500K. Yeah. So is this amount fixed or it varies?
no, what happened is for those that have above that amount, after everybody has been taken care of,
Mm.
then the remaining asset that has been realized,
Yeah.
then they now rank the remaining creditors pari passu, so
Yeah.
that um, they don't just pay the big depositors and leave out the smaller ones.
Yes.
So I think that is what they do.
Okay, thank you for your contribution. So, Visa, this is what we mean. I mean, I will write the question in detail so that you'll be able to see it. Yeah, I'll
Hello.
put it in detail. And I believe Osahon knows what we are talking about because he works in insurance. So,
Yeah, I just want to get clarification.
yeah,
Are we
okay.
talking about capital base here?
Yeah, not only all the regulation, not only related to capital,
Oh,
but even in the operations.
even in the operation. Okay, okay, okay. All
Yeah,
right, all right.
yeah. So I will just put these questions in written in the slide. So I will share the slide latest by tomorrow. I need to finalize the slide as I just start working on it today due to timing and very tight schedule. Yeah. So do we have any question? Yeah. So and sorry, just to recall, I shared the probability. Yeah, the seminar slide. Did you have a chance to maybe check it, or did you receive it? Just want to confirm because just want to be sure that everyone have access to those materials, because next week we are going to check and start doing something more advanced. Yeah, because I can see like we still have what time, Sharabil, what time is this class supposed to end?
9 o'clock lesson.
Ah, nine. So
We
I
still have an
always,
hour.
yeah, I always prepare the slide in such a way that it shouldn't be more boring, but I make sure that I cover all the topics
Yeah.
um, for the plan, because this is what we have. If you look at the syllabus, this is what we have. So they are kind of basic and more of theoretical. So maybe mass, if we start something that more of quantitative, it will take us even more than 2 hours for us to solve some problems. But for now, the class will not be as long as 2 hours as scheduled. But we can stay up to 2 hours if we have some discussion or you have some problems that you want us to discuss. Then of course I'll be here. So is there anything?
Okay, I saw the probability slide, but I don't know if the class have the class been like has the lecture been taught
Yeah, we
and
only
stuff.
did not we didn't cover the whole slide, but we have started. So next week I will give a recap and then we'll continue.
Okay. Okay.
Yeah.
Meanwhile, you can still have the recorded session. It's shared in the groups, so you can maybe check the link and you can find the recorded session of the
Yeah.
talk.
Okay, again,
Okay.
um,
Mhm.
again, I just want to know: Are we going to be touching financial risk management?
Financial.
Yes, financial risk. Are we going to be touching that area?
Yes, of course. I think if you can check the schedule, the course outline, we have it. I can show. Because I have it. Wait 1 second. Okay, so just 1 second. I will share my screen. I need to stop sharing this. Okay, let me to view the entire window. Hmm. Okay, so if you can see my screen, this is where I prepare. Yeah, here. So this is what we look at today, and then now we are going to like look at data analytics for risk assessment, risk measurement and modeling. So in this case, we are going to do more of financial, because everything we are going to deal with here is going to be financial. So on the module number 3. So yeah, of course we are going to do here. We are going to do more of we'll start exploring data set on this one. So that will be next week. So we'll do some, and please, I believe by now you all have your Python set, yeah? Yeah, because if we are going to do this, we need to have a place to sit down and then start doing the analysis together. I will carry you along to see how we can analyze data in Python. Yeah, if there are other softwares also that you are interested in, you can bring them. I can also bring others just for learning purposes.
Okay, so for the Python, I don't know how to get the software.
Did you attend any of the Python class?
No, but though I watched the video, but I'm not through with the video. I thought I saw him explaining the basic
Okay.
programming.
So, Sharabilu, please, if you could help her with this, that would be great.
Okay, I think if you still check the video on Python, you there is, I mean, a whole session where the installation process is being done. I think Ebon
I mean,
here.
you can send it to her or send her any relevant link that you think will be helpful. Yeah.
Okay, no.
Because you said you checked, you didn't find, right?
No, I said I was not. I did not finish watching. I'm still
Okay.
watching it. I've not
Ah,
finished.
okay.
But
Yeah, yeah. Try
I'm
to.
I'm just asking if I know that there can be some software like maybe direct. Maybe I don't know if it can be placed on the. Okay, you wanted us to download it, not like maybe you will put it on the OneDrive and we'll get it there.
No, no, you can just install it
Mm.
on your own. It's
Yeah.
easy, not like a rocket
Like
science.
we can
Just
download it. We can download Jupyter directly from from
yeah.
web.
So if you are using, yeah, you can download Jupyter Notebook. But another way you can use, you don't need to use Jupyter. You can, because Jupyter maybe is very heavy. You can use Visual Studio Code.
BS Code. Yeah.
Okay, I can download that one directly from.
Yes, just search on your computer VS Code for Windows, and you will
Just
see.
I think just ensure to just watch the video till the end. You will see how we install that. I think Ebon help us to share her screen here, and we give her, I mean, set of instruction on how to install from beginning to end. So do
Okay.
that. At any time, if you have question, you can just send the question to the group.
Yeah. Okay. Uh, who else? Bello, you want to say something, right?
Yes, just a comment. Sorry.
Mhm.
I'm wondering if there is a site, a URL that could guide Fisayo. Maybe this could be shared with her.
Yeah, yeah.
Or
I
if there
can.
is an application file that maybe once you just double click it, will just run, and I mean much easier without
Yeah,
having to do maybe some settings here and there. Maybe that might also
yeah.
help.
I can send. I can drop the
Like
link.
a setup file,
Sorry.
like a setup file where one can just click and you know
Yeah, I
run
dropped the
it.
link on the chat. Please check it, and you will be able to just install Visual Studio. You will just search. You will choose if you are using Windows or you are using MacBook. You just need to choose which one are you using, and yeah,
Okay.
and there you can just download. Once you click on it, you will see Windows, maybe Windows 10, Windows 11, whatever window you are using. Click on it and click download, and you will be able to install it. Yeah, in the next Python class, that will be when Sharabilu. Maybe you can just ask them; they will install it for you once again.
Yeah, I think it's Thursday, right? Yeah, Thursday.
Okay,
Yeah,
so on Thursday.
yeah.
Yeah. So do we have any other thing to discuss? So I think if not, we can just wrap up the call and then see you guys next week. And thank you for all contribution. And yeah, have a great evening.